Happy Monday, everyone, and welcome back to Open Exchange TV. Sorry about the delay this morning. It was my error on my side. Cold weather is back here in the northeast. That's why I'm rugged up with a little bit of extra coverage here. It's been an incredible weekend, and if anyone got a chance to sneak out there and check out Black Panther, it was a record release for November, $180 million for Wakanda Forever. But we're not here to talk about movies. We're here to talk about the week ahead, and we have Brendan McCarthy back from Column E. How are you, Brendan?
Good. How you doing?
Living the dream, buddy. Living the dream. All right, let's jump into it. Brendan, I can't remember seeing the markets bounce the way they did, like they did on Thursday and Friday last week. Sure, if I test the memory, I will remember something like that. But it brings out the bulls and the bullish talkers like Cathie Wood, who always loves to talk her own book. She's thinking that inflation is unwinding and that we could be heading back to the roaring 20s. But as Chai Girl points out in the retweet that you can see here, Cathie may want to look at her history books and remember the market crash of October 29, 1929. Not so much roaring 20s then. Brendan, I feel that this rally took a lot of people by surprise. And we've talked about the record amount of put purchases recently. Why is this a short squeeze, Brendan?
I don't think it was a short squeeze per se. I looked this up last week. So I was trying to figure out, all right, because I think Zero Hedge always loves to post a chart of the short squeezes when they occur. But the Goldman Sachs most shorted stocks actually lagged the S&P last week. So it wasn't shorts necessarily, but it was a quality squeeze. So now Goldman Sachs also has an index for that as well, a quality index. Incidentally, one is not the same as the other. You would think low quality would also be most shorted, which is a whole discussion for another time. But low quality stocks actually outperformed the S&P last week. They've been outperforming the S&P for the last 2 weeks or 3 weeks. And on Thursday and Friday, I think they outperformed the S&P by almost 6%. Just a tremendous amount. I think it's what happened last week was the analyst community, and we've been talking about this. Analysts have been so wrong that I think they all jumped on the other side of the train this past week, tried to short the heck out of everything with their earnings expectations. And I think the algos finally decided to go against the wave and go against the herd. And I think that's why you saw low quality stocks actually bounce. I don't know if this is a leading indicator of something to come, in that maybe they're buying these low quality stocks because they're going to become higher quality stocks going forward. Tough call there. I don't know. What amazes me about the fact that they keep parading Cathie Wood back out on these channels, she either has an amazing PR firm or these people are insane by doing the same thing over and over and over again. Also, her thing on the roaring 20s is straight out of Goldman Sachs. I think they posted that right before the crash last year. I think they had a whole roaring 20s thing coming. And she's a former GS, I believe, trader, or she had traders for her or something. I don't know. But I can't. October 29th of 1929, the crash that Chai Girl put up. I will just say that this environment isn't the roaring 20s. It isn't a banking crisis. It's just a different environment of money running out of control that the Fed is tightening. Back in October of 29, you had like 11 central banks all pumping money or removing money simultaneously. And you had that market skyrocket. So I would just say that last week's move was a quality move. That surprised a lot of people because everybody expected bad earnings. And if you were to look at trailing earnings right now, I think it came in at around $207 a share as of Thursday or Friday last week. That's the highest it's been ever. So earnings on a trailing basis are not falling yet. The forward earnings they're down about $6, which is like 2.5%. So I think we're in that period where if they're buying the low quality stocks, it's because they see that maybe the analyst community is wrong with the timing or something. I don't know. But needless to say, it wasn't a short squeeze last week. It was more of a quality squeeze. And I don't know what to make of that yet. It's just something to watch going forward.
What do you think of people saying that the market's found a bottom? And before you answer that, I don't have an image for this, but I saw a tweet over the weekend from Jeff Hughes just retweeting Octavio Costa. It says, to put it bluntly, we have never seen the market bottom with 60% of the treasury curve inverted.
I don't know if you can look at rates right now as a proxy for anything, because we had 1980, 40-year bull market in rates. Anytime a bull market unwinds, the signals sort of disappear. Like, I mean, was the economy, when the NASDAQ blew up in 2000, was the economy going into the abyss? Not really. I mean, the economy did slow, but it didn't fall by 90% like the NASDAQ did. So I always, rates are tied. Like there's certain parts of the rate curve that I look at. Like, for example, the SOFR rates, like 6-month SOFR rates are really good in terms of if the market's too tight or not. If the funds target's over 6-month SOFR, then the Fed's restrictive. If they're not, so the rate market's still pretty open. I will just say that this market looks like a lot of bear market bounces that occur in the fall. We go up into the end of the year, and then we fall back into March. That happened in 2002 into 3. That happened into 08 into 09. My market history isn't. I mean, those are the 2 last bear markets of sorts. So we could easily have a year-end rally and then fall back down. The biggest thing I will continue to go on is money is still coming out of the system. And as long as money continues to fall out of the system, markets really can't rally against that. That's just the way it is. Like, if you take money out of the fact that the dollar got destroyed last week, which is kind of fascinating to me, since the dollar was rallying on scarcity, they're still pulling money out of the system. So I don't know. There's a lot of people throwing the flag on the fields, not the flag. They're waving the flag at the bull markets here. I wouldn't be surprised if we rallied. But as long as money is still coming out of the system, that argues stocks and assets go lower. And in a way that argues that rates probably go higher. There's less demand for rates. So it's one of those weird transitions we're going through, at least from my perspective.
Yeah, well, so far, the whole trend of like rallying after the midterms, it's on track.
It is. No, it definitely is. But I think it's for different reasons this time. I think the algos, that's why the rally was so powerful, because of that seasonality. They had to catch up to it. It got disjointed the day before on midterms, because it looks like the Democrats retained the Senate, by the way. Anybody actually know that? I just happened to notice that this morning or yesterday. Yeah. I'm like, that's not actually, good. But nobody's saying a word about it. It's a major problem if you think about it, because it affects that average 17% midterm post return that everybody was talking about last week. Now it's no longer on the table. So I don't know. Anyway.
All right. Now, another thing we have not talked about in quite a while is cryptocurrencies. And last week, they blew up in a big way. FTX had a historic collapse into bankruptcy. And a lot of people are questioning, how did all of this happen? I've been involved in capital raises before, as have you, Brendan, and there is an extensive due diligence process. With the quality of investors in FTX, it is shocking to think they weren't aware of what was going on at FTX. But when you look at these 2 Forbes covers, maybe Forbes needs to be doing a little bit more due diligence themselves on their annual Forbes 400 list. I cannot tell you how many shows and people we've spoken to about the need for regulation in crypto. And now even Janet Yellen is getting on that bandwagon. It's not only FTX investors that are impacted by this collapse, but it's clients and companies that they've acquired as well. I know this list might be a bit tough to see, but it is a huge list of names that FTX has acquired. Brennan, this has shaken up the whole crypto community and all the valuations. What do you think this means for crypto going ahead?
I think it's so. I've been on a mission, let's put it this way, since I launched Column E to figure out how do you value crypto. And the most common answer is scarcity value. My response to that is usefulness. Like, how do you use a token? Can you use a token to buy something or sell something? Does it have an economic use? And if something has an economic use, it has an economic value. If something doesn't have an economic use, it doesn't. And like, even the crappiest of penny stocks out there have a valuation because they can be purchased. Their company can be taken out. Ethereum and Bitcoin do not have any stake to anything. You can stake them, if you will, to interest levels. But there's a couple of smart. I get, maybe I'm just not smart enough here, but they come back to me over and over and they tell me it's scarcity. And I just don't buy that. I have baseball cards. They're scarce. You know, there's a Wayne Gretzky card out there that just sold for $2.5–3 million. That's pretty scarce. Why is Bitcoin?
Did you own that one?
No, but I actually own the year after. God, I can't tell you how I felt when I found that. I have his first NHL card. I don't have his WHA card, which is the difference. Another story for I love talking. My son's into baseball cards these days, so we're talking a lot more baseball cards lately. Anyway, but back to crypto. But anyway, so with crypto, I posted this on Twitter. It's like one mob family taking out the other last week with Binance and FTX. Binance literally put FTX out of business. They can say what they want, but they said there was a run on FTX. We're going to start selling their tokens, and then FTX literally went out of business. Can you imagine if Jamie Dimon did this with JP Morgan, like power, and went after Morgan Stanley in this way? Guess who would go to jail? Jamie Dimon, or everybody who took part in it. And now I think I said this. I lived through the Bear Stearns massacre. I was on the desk when it happened. We knew the hedge funds were leaving. Well, we had heard the hedge funds were leaving the clearing operation. It was all rumor. And then we all found out afterwards that it was true. But like guys were pulling money out because they were legitimately scared. Binance, on the other hand, decided they're going to blast the crap out of FTX and to put them out of business. How can you honestly like that if you're in the crypto business, especially if your assets are held at FTX and they're not protected in the bankruptcy process? And remember, Coinbase got absolutely flattened like 3 or 4 months ago, saying if we go into bankruptcy, your crypto is our asset. I mean, like this is the flag on the field that says regulations coming to the crypto world, and it's probably long overdue. I mean, retail investor, this is not a world for the retail investor unless you're going to put it in there and pray to God it goes up. I mean, again, it goes back to cash in the system. Right now, there's still a decent amount of cash in the system, and that's why Bitcoin is still around 16,000. I swear if the Fed were to continue to drop the money in the system, which they need to do if they want to kill inflation, crypto is going to continue to fall with it because crypto is an offshoot of cash. There's just so much cash in the system that it created inflation, it created crypto, and there's no doubt the technology of crypto is very, very powerful. The blockchain is I think the blockchain is awesome. I love the blockchain. I think it will reinvent industries, flatten industries, make them more efficient. But the tokens, to me, it's just that you need more than something called scarcity value to drive them higher. Now, that's not to say there's no trades here. But like, for example, we just happened to be posting our chart views last Wednesday night when Bitcoin was at 16,000. It sat right on our resistance level, support levels. And we posted, we're neutral right now until it breaks. Well, the damn thing bounced. It was like we looked like 4 soothsayers, for God's sakes. Like it wasn't intentional. It just happened to bounce. Bitcoin, if it drops below 16,000, I think the selling just resumes. And I think confidence is relative. If you're a billionaire, like Tom Brady and Giselle got destroyed in FTX, I guess, supposedly. I don't know if that's true. What?
Mr. Wonderful was one of their
Mr. Wonderful. Mr. Wonderful is a product of this bull market. He and Kathy Wood can share stories. Except Kathy Wood is the one suffering, and Mr. Wonderful hasn't seen his ETFs plummet yet. But anyway, I got sidetracked. Anyway, every bull market has people like these people that benefit from them. And this guy, FTX's founder, I can't even pronounce these names. All throw me off because I don't follow the sector closely enough. But I'll just say this: if two billionaires or whatever they are can go head to head and put one out of the other out of business, do you really want your assets in that world? I mean, it's awfully dangerous. There is not to say there's no opportunities. Again, the technology is wonderful. Like if you can get into the technology side and earn something off the technology, that's where the value is. That's where Ethereum's blockchain is. That's where NFTs NFTs actually have scarcity value in many cases. I mean, they're very, not to say that they're worth anything, but NFTs actually have scarcity value and they trade on the Ethereum blockchain. So, and the others, but that's where the value is. And to me, that's what you would buy if you could find the right thing. I couldn't tell you which NFT to buy, to be honest. But I just, the regulation is coming. And crypto, these two guys really screwed everybody. And it's just greed in the end. You know, when you have greed in a business and they don't have, this stuff is very, very top heavy. So it's like the little retail investor doesn't stand a chance in this if these two guys decide to have a temper tantrum, just like they just did. And this is where we are. So I don't know.
I'm going to disagree with you a little bit on that.
Okay.
Yes, the Cowboys, as you refer to, yes, they've done very wrong things, bad things. The SEC has let everyone down here.
God, yes.
Yeah. They have had ample time to regulate this industry or start the process. They're continuing just to like people send in your views and your suggestions and so forth. I'm sorry, this is not a high school voting for the king and queen of the prom. This is something they needed to take seriously a lot earlier. And it's not as if we're talking about 20s, 50s, hundreds of millions. This is billions of dollars. And they have let everyone down. Sitting there watching up there saying like, oh, well, we're thinking about it. We're happy soon. No, sorry, you needed to do it yesterday. And now they've been caught with potentially their hand in the cookie jar and billions of dollars are missing as a result.
Yeah, no, and customer assets, anytime customer assets come in, see, Gary Gensler was all over them up until about 9 months ago, and then he stopped. And nobody really said why. And I know FTX was lobbying like crazy, and there's a whole political angle there to FTX that I can't quite figure out. But the SEC should have been here a long time ago. But the problem with crypto is it's global, so it's hard to regulate a business. I think they're not sure how to do it. It's growing too fast in their minds. It doesn't say they shouldn't have done it, and they should have been protecting customer assets all along. If you manage customer assets, there should have been protections all along. That is first and foremost. That is always the case in every business. Like if you manage, like Massachusetts, if you have customer assets, they scrutinize you. Like they make sure those assets are protected. You shouldn't lose assets if the company goes down. And that was one of the things at Morgan Stanley we always said. Well, you know, if the FDIC insurance went down, we still had SIPC, and then we had Lloyd's of London on top of that. So if the world came to an end, well, Lloyd's of London would go down. But Morgan Stanley's assets were protected regardless of, I mean, go back to Bear Stearns. Bear Stearns was run out of town by the guys at the top. Customer assets got protected, right? So that is FTX much different than Bear? I don't know. But, well, I love my Bear Stearns. I shouldn't. Bear Stearns was I love Bear. But FTX is not Bear Stearns. Bad.
Well, listen, crypto is regulated in other countries in the world. The US is just sleeping at the wheel. Yeah,
I guess. I mean, but if there's a loophole, if you're not regulated everywhere, then you're really not regulated anywhere, because there's you just move from country to country to hide from it. I mean, that's why they close loop. That's why everybody gets common. That's why the EU gets together with everybody. The EU gets together with the US, and the US gets with Canada.
They also had tax breaks like for bringing people in. I get all that sort of stuff. They're rewinding that now. You move to the next country. Like if you are young, nimble, or younger family, you can move all around like that. Great. Obviously, as you get older, you can't really do that. But depending on how you set yourself up. But listen, I think the bottom line to all this, from my perspective, is that it needed to be regulated yesterday. And they don't pull their finger out shortly, it's going to be even worse.
There's like, anytime customer assets are threatened, you get 2008. That's what happened. There was bank runs. That's what the Fed was worried about. They were afraid that people would start pulling their money, and that would be the end of it. And that's why the regulation came down so hard in 08, 09, and 2010. That's why all these other things came into effect. And crypto is about to find the pain of it. And what does that do to the economics of that business too? That changes things rather dramatically too. That's a whole other discussion.
Yeah. All right. I'll stop being fired up now. Let's get on to something I really like talking about, and that's earnings. It's a big retail focus this week, as you can see the names there from this week. Let's start with Walmart. And they report Tuesday pre-market. Analysts are confident going into these earnings. And how couldn't they be? Consumers are looking for the best deals right now, and Walmart offers that. Deutsche Bank has Walmart as their top pick ahead of these numbers, and Morgan Stanley is positive on Walmart as well. With this bullishness, though, Brendan, what could be something to make them miss?
So I don't know. A couple of things, actually. Well, first, I did a little quick research on the sector earnings report. So with all the negative, dire, and earnings sucking wind this quarter, consumer discretionary is actually better than last quarter so far. So there is actually, now I don't know what the inflation impact is here. I think that might be what's driving the earnings side. But for the most part, like the likes of Kohl's just beat, when's the last time Kohl's beat anything? I mean, they beat by 25 cents per share. So why can't Walmart beat? But basically sales and earnings surprises are on the rise for the group. Everybody's talking about back to school being a big deal this year. I still don't see how that's possible. I was in a Staples leading up to back to school. It just wasn't busy. They didn't have the product offerings they normally do. Maybe this is a Staples thing. I don't know. But you have the trade down effect going on. Like we've been reading about this for months, and Kohl's just proved it out. People are trading down from higher priced stuff to go to the Targets, to go to the Walmarts, to go to the Kohl's. And Kohl's did it right because they brought in higher priced product like Nike, and they raised the level of their stuff. That's why they did better. Will those with money trade all the way down to Walmart? I'm not sure. A lot of the analyst community thinks they're going to beat, but they're going to beat mainly with the fact that prices are higher and volumes are lower. Now, great, you're making more money, and that's the bottom line, right? Sales don't matter if you're making more money, but Walmart is a volume retailer. They need volumes. And if there was a reason to believe they might miss, it would be because they didn't generate enough volume, regardless of how much income they generated on that volume. So that would be one thing I would see that possibly could hurt them. There's also a headline. I came across it. Peter Bookbar, he posts stuff through Doug Cass's thing on Real Money. And he mentioned that Wall Street Journal said that Walmart's putting the screws to their suppliers again. Well, they only do that when the supplier, they're getting their own margin squeezed. That's the only reason they do it. I noticed BJ's is, so I was in BJ's about 2 weeks ago. BJ's gas was actually higher than normal, which means they're not getting a deal on their gas right now, which is kind of fascinating. And second, their products that they sell, there wasn't a major difference. They had a massive margin difference, BJ's versus the Walmarts. They were making a big amount of money. That difference has changed dramatically in the last 3 months. I don't know who this is good or bad, though. I don't know if this is BJ's going to do better or Walmart going to do worse or vice versa. But I'll say with Walmart, there is a margin squeeze going on. They may not make as much money as people think they're going to make. And if volumes are down, because a lot of people that shop in a Walmart right now are losing money. They don't have a lot of money. It's their clientele. That's the group suffering from inflation the most. And I would just say that Walmart, that's the threat to Walmart. Did people that have money trade down to Walmart enough to offset the loss they're getting from their main clientele? That would be the possibility of a miss. Now with the stock, it looks pretty powerful right now. People are betting this thing's going higher. It's funny though. It's at resistance of the previous peak from August, and that also ties to a peak back in 21 as well. So I don't know. There's a lot of charts that have this weird tie back to 21-18. I don't know what to make of it. Walmart's another one of them. I would just be careful. If these guys miss, the downside's bigger than the upside.
Yeah, it's interesting. Kramer, I heard him talking last week saying it's cheaper to eat out than it is in at the moment. And so to me, it is just so wrong.
It is very wrong. I'll tell you right now, it's a lot cheaper to cook at home than it is go out to a restaurant where the food isn't as good. Like I'll tell you right now.
Chef, Brandon.
What? I'm not even a good chef, but the Ninja grills, the footy grill that I have, that thing is the air fryer. It's the greatest invention in the world. But I'll tell you right now that cooking at home is it's still 30 or 40% cheaper than going out to the restaurant. You still got to pay a tip. got to buy you can buy alcohol for home. Kramer's way off. I don't know where he's eating. I don't, maybe he's just continuing
Not around where I live, that's for sure.
Yeah, no, I don't. Maybe he's comparing to his
unless
restaurant.
he's got broker dealers picking up his tab for him so he can do a nice little bit of bullish reporting on them.
That could be it too. It's a good point.
All right, let's move. I'm going to do a new one here for us, right? We're going to do a combination, and it makes sense to have this combination. Home Depot reports Wednesday pre-market, and Lowe's reports pre-market on Thursday, I think. Evercore ISI thinks expectations have been reeled in on home improvement retailers due to the high level of mortgage rates and recent softness seen with vendor earnings. You wouldn't be able to tell that from the construction going on around me, and the Home Depot near me is always busy. Are people too bearish on these names, Brandon?
So if you look at those two charts, I just said those who have money and those who don't have money. Well, Lowe's clientele has money. Home Depot's doesn't. Or I shouldn't say that. It has less. If you were to compare, this is Target versus Walmart. This is Staples versus Office Depot. I mean, this is the comparison. The thing with Home Depot, it's a W. I like Home Depot's chart better. You see a lot of Lowe's chart everywhere, though. All these formations are very similar. Walmart's chart, though, is a W. W's to me are more powerful, but then that thing you see on the right with Lowe's. But I actually took a little dive into Home Depot versus the 30-year conventional mortgage rates and Lowe's. Anytime rates spike like they have prior to the financial crisis, Home Depot's gone sideways for 20 months. This is prior to the time where the Fed didn't put so much money into the system that made these little things smooth and go away. So if the Fed is maintaining this removal of cash, which is what it looks like it's trying to do, Home Depot and Lowe's may go sideways for a very long time with this spike in rates. Because this spike in rates is not just on mortgages, it's also on home equity loans. So if your home equity loan costs a lot more, maybe you don't go spend that home equity loan on your lawn. Or maybe you do trade down and you buy something different. I know that these stores are busy. I know real estate is still, you're seeing places pop up over the place, but you're seeing a lot of cancellations as well. A lot of people I'm citing today, Danielle DiMartino. I don't really read her stuff too much, but she said cancellations in Texas are jumping dramatically. Texas was a hotbed. It's where everybody in California moved. If they're canceling down there because of the cost, what does that say? I mean, if you have a house, I guess you can continue to approve it. I go to Home Depot all the time just to get some, relief. It's like a nice walk through the store. It's like walking through the park in a way. But I'll just say Home Depot actually has a big commercial base. That's going to hurt. Lowe's doesn't. But Lowe's, these people are still faced. It's the same mix. It's higher income, lower volumes. And at what point does the income roll over and the volumes not rise? And I think that's where we are. So with these guys, they have a lot of pressure against them. Home Depot surprised, I want to say 2 quarters ago, when they said everybody thought Home Depot was toast in the spring when real estate was coming off, and Home Depot beat. It was a surprise, I believe, if I'm not mistaken. Lowe's was, I think, the same thing. They tend to follow each other. So I'll just say this, that I think if we're in the pre-global financial crisis behavior, these bounces will, if the W on that wall, that Home Depot plays out, it's a pretty powerful move. But I don't think you're looking at a really long-term extended move, because I think that the spike in mortgage rates is going to be with us. And look at it this way. The cost to purchase a home basically just doubled. That's less money you have to spend at the Home Depot. Really, you're not going to have that to go to Lowe's and Home Depot. The commercial builders, if they have nothing to build, they're not going to go to the Home Depot for the lumber. Lowe's people, if the money starts to get squeezed there because they're going to trade down. So maybe they don't go to Lowe's, but they go to the smaller convenience stores. There's a lot of pressure here. And I think I said all this 2 quarters ago and they beat. I don't know how they did it, but they did. So would a beat be unheard of? No. But I think there's a lot of long-term pressure on both these names.
Okay. I know we've gone along over time. It's a delayed start. We've got 2 more names to go through. I'm watching. So Wednesday, Target reports pre-market, and I'm mentioning Evercore ISI again here, and they issued a negative tactical trade call on Target due to what it expects to be a soft comparable sales and EPS report, excessive inventory build, compressed discretionary demand, supply chain volatility, inflation, all things that are still in the mix. I personally like Target. I always like going to their stores, but they always seem to come up with surprises, whether it be good or bad, regularly when they have earnings. Can we see another surprise from this release, Brendan?
So another chart, this one looks like Lowe's chart, right? Higher low off the October there. So again, this is people with money, Target versus the Walmart. With Target, you have the extra added dimension of misses on down. So they guided down in May and June, if I'm not mistaken, because they had an inventory glut. And the analyst community believes they're working through the inventory glut. I can't remember who the heck I want to think of that got through an inventory glut and started reporting huge earnings. Somebody did. I just can't remember which one it was. But when they got through the inventory glut, they were left with merchandise that they were making a ton of money on. I don't know if that's Target. If they don't report good earnings, they're going to have a management problem. Again, management has been bad this year. They missed the inventory turn. They guided down twice. The stock is bouncing. That's debatable as to why. It's still in a long-term downtrend, in my opinion, based on the way things look. I know it bounced off was at the 200 week or something, but I'll say that Target's also relying on the same mix: higher prices, lower volumes. Their biggest play right now is Ulta in the stores. When they open up a new store, they throw Ulta into it. That's a big deal because Ulta's been on fire for the past 2 years. But if you go into a Target, they're run down. They're not upgrading for whatever reason. They're not upgrading the stores, and I don't know if that's a CapEx thing. I don't shop at Targets as much. We do a lot of ordering from them because their shipping is really fast. It's like it's almost better than Amazon's. Actually, the pricing is better. And I don't know why that's the case either, but discussion for another day. I'll just say that this is another question. Like if they don't beat here, management should be questioned. That means they didn't turn on the inventory quickly enough. But if they did, the upside could be decent. I mean, they could say, all right, we got rid of our lower price inventory, or our out of whack inventory, I should say. Our profit margins are going to rise and our revenue is going to rise because we're able to have better pricing power and mix our price better. I don't know if it's true. I don't know if that's going to play out. A lot of people threw the stock away after the second downgrade. So the second one, and anytime management can't get their hands around a cycle, people distrust it even more. So that's on the table with these guys, in my opinion.
Yeah, it's interesting you mentioned management there. I think as we come out of this cycle, there's going to be a lot of questions on management from a lot of different companies.
Yeah.
Example is Disney. Like we covered them last week and we saw what happened.
Yeah, that guy is just blowing Disney up. My God.
You can even mention Meta.
Yeah, like Zuckerberg is just, ever since she left, Susie Sandberg left, they can't operate for whatever reason.
All right. The last one I want to dig into here before moving on to love it, like it, leave it, is not in the retail space, but one that I think we can see some volatility associated with when its earnings release, and that's Nvidia. They report Wednesday after the close. Expectations are for revenue of $5.8 billion, which is down 18% year on year, and an EPS of 70 cents, which is down 40% year on year. AI chip restrictions in China will be the main focus here. Any disappointing news here could see a sharp sell-off. Options trading implies a move up or down of 8% after the earnings release. And the last time they reported, shares of Nvidia gained 4%. The stock has had a big move off of its lows and is up more than 40% over the last month. Brendan, what are you thinking about Nvidia?
So speaking of management missing the boat, these guys definitely did all summer. They tattooed the whole semi industry by missing like 3 consecutive times, 3 different downgrades. I can't remember what it was. Actually, it's every peak on that chart, right? 1, 2, 3. I'll just say that they have a lot of pressure on their earnings streams. Microsoft reported gaming was flat year over year, and Microsoft's a huge player in gaming. They rely on gaming. That's going to be interesting weight. You're not reading that in the analyst community. They're not really. Analysts break their categories down differently, so it's hard to figure out what they're really talking about, like visual and all sorts of wind. I couldn't even figure out what it was. But I'll say the gaming segment's slowing. Roblox reported last week that the over 13 crowd was buying more. So that is the spending crowd for kids. Again, maybe it goes back to those who have money argument, right? The parents are saying, all right, we got a few extra bucks. Go buy yourself EA's FIFA ahead of the World Cup. I don't know. But Nvidia is a hardcore gaming guys. They don't buy the EA games. They're in like all those bigger, more like shooting games and war games, that sort of thing. I'll just say the chip story out of China, I think, is CDNS. We talked about, I think, 2 or 3 weeks ago, if I'm not mistaken. Yep. They said that the thing in China is manageable, and their competitor also said it was manageable. So I'm starting to wonder if this this whole thing with the U.S. government, the chip sector, is not real. I didn't research it closely enough to know, but if people are saying it's not that big a deal, major players are saying this, what's to say Nvidia doesn't say the same thing? I don't know. Their fastest growing segments are OEMs and IP. This is where I can't really quite figure out what is what, but I'll just say OEMs and IP is their biggest. That's their fastest growing. Autos is starting to rise for them, and professional visualization. Those are the 3 growth sectors. I got this from Bloomberg. If any of those roll over, you'll have all 6 of their segments falling growth-wise. For a stock that just rose 40% off the lows, if they miss, what's to say half of that's not given back? I don't know. I'll just say this. Last week we saw a lot of stocks break out like this stock, miss earnings, and then they absolutely get trashed. Lyft is one of them. Neo went down, then came back up. I could go on and on. Low quality stocks last week that missed at the beginning of the week got absolutely obliterated. And then the rally out of nowhere occurred, and low quality rallied. So Nvidia right now, I wouldn't say that low quality, but they're getting there. They're moving down towards that spectrum, it seems. I'll just say that the chart is bullish, but if they miss, you better be out of the way because they're going to correct that rally. It is a very nice chart. And if they weren't reporting earnings today, I'd be a little bit more like, all right, there's a good opportunity for this stock to rally probably another 100 points. But earnings could be the one thing. You're playing a little fire with these guys because management, again, hasn't been the most reliable. Cloud is slowing, as all the cloud players showed. It's just a tough one. But the chart argues it's going higher. It's just, you got to be really careful with this one.
Yeah, I've seen some headlines that have come through here this morning. Biden's spoken with President Xi. Absolutely Biden believes there shouldn't be a new Cold War, looking to manage China competition responsibly. Significant, very blunt with one another. Doesn't get any sense that there's more or less confrontation. I always feel like when they have those sort of chats that everything comes out all rosy and we're moving in the right direction, and then 2 to 3 weeks later they hate one another again. So maybe not too much can be taken from that, but you might see a little bit of a rally again today, even despite the futures being down.
Well, you'll see Xi over the weekend. China went like crazy with the real estate market. I mean, they just plowed right? They plowed a lot of money into the markets. This could be part of the same strategy to get their economy boosted. Again, like there might be growth in that economy. You're just not hearing about it. Like, I think there's something there. You're seeing anecdotally. I don't know. It's not like we're about to talk about some Chinese stocks, but I think there's something more than there. Real estate's a real problem. We learned that here in the United States. Anytime real estate folds up shop, you pay the piper, and China's paying the piper. And whether he and Biden agree or not probably doesn't matter in the grand scheme of things, because they always throw this stuff at them. And the blunt talk, I've heard that every time Biden has talked to him. It's like a keyword, blunt. Whatever.
Well, as you said, there's a little bit like sort of an accidental theme sort of came to it. So before like, love it, leave it. There's definitely an Asian theme. And if you're flying over to Asia, you're definitely going to want to get through security a bit quicker. So let's start with Clear Secure, symbol YOU. What do you think about it?
So it looks like they beat this morning. I think we talked about. I liked it.
They're up a couple bucks pre-market.
Yeah, so the chart looked good, so I like it. Kind of looks like Rivian's chart last week, off the lows. I don't know. They don't have the same business. I don't even know if Clear Secure does, to be honest. But Rivian bounced last week. Probably Clear Secure has a little bit more, so I like it.
Yeah, I think Clear Secure is in the company that's like you when you.
Oh, there's sport management. That's what it is. That's right.
Wednesday aftermarket, Cisco.
Tough one, but I like it. I always picture John Chambers coming on CNBC after the earnings call. For all those years, he'd come on. Anyway, I like it. Chart shows plenty of indecision this past week, even when the market's rallying, but it was rallying before the bounce. So I think that might be good. I don't think the report will be great, but perhaps that's priced into the market, so I like it.
Thursday pre-market, Weibo.
I like it. Big reversal after a breakdown through 1250. It does looks like Ford's chart. I mean, these charts all look alike. I mean, I'm just thinking the price, but Ford did this, hit 1250 and bounce. So there's a little risk in this one, but I like the bounce. So I like it.
And also Thursday pre-market, we have Alibaba.
So this chart looks like Amazon's, which makes sense because they're a competitor. I would leave it though. It broke through support a few weeks ago. It's bounced a little bit. Didn't do much last week. It bounced ahead of its bounce over there. Kind of interesting, but I'd leave it.
Another one for China, JD.com.
So their competitor over there, JD. I like JD. It broke over 45. It ran to 49, which was a high from 18, strangely enough. It's going to need a good report to break through it, but for now, I like it.
And the last one we're looking at is Foot Locker.
So the power of basketball shoes. I don't know if that's true. I like it. Good bounce off of 30. Maybe it's Foot Locker's time. I don't know. Breath is rising, which supports any stock. Over 36 really gets it going to the upside. It would be like gets over 36, it becomes a long-term play. Listen,
we have gone so much overtime today, Brendan, but it's been a great show, and I definitely got a little fired up on the crypto regulation side. Listen, you have a great week, Brendan. Thank you so much for your time again.
Hey, have a good week.
And for everyone else out there, good luck investing.